Hey everyone, during Rivian's conference call, they informed investors about what's going on at the company, their latest developments, the progress, and the prospects that I think are imperative for Rivian stock investors to know. So that's what I'm going to cover in this video and what these developments will mean for Rivian stock investors. You're not going to want to miss these items, so let's jump right in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Starting with Rivian management saying that they emphatically want to state just how deeply convicted we are that the entire automotive industry will be transitioning to electric vehicles over the next 1 to 2 decades. And I took this statement as okay, obviously, you've just spent billions of dollars and staked your business on that premise that you believe electric vehicles are the next thing. Your company is only producing and selling electric vehicles. So, okay, that's yes, we agree that that's what you believe. You've put your money behind it, so we believe you. We believe a substantial competitive advantage is our approach to vertically integrating our in-vehicle computers, software stack, and propulsion platform along with our efficient direct-to-consumer go-to-market strategy. That's what Rivian believes is their competitive advantage. Now, while that might be true, this has been incredibly expensive to build out. Rivian's ramping up process, or its process to get to this point, has cost the company billions and billions of dollars, upwards of $10 billion, and it's still burning through billions of dollars every quarter, every year. And so, while this might be a competitive advantage, was it worth it? Was it worth spending billions of dollars to develop this technology, to develop these capabilities in house? Or would it maybe have been a better use of capital to outsource some of this, to buy some of this from someone else that already had the capital investments in place, and you wouldn't have had to spend so much money to develop this technology? Now, it's too early to say if one strategy was better than the other. But given that so many billions have gone into it, and given the decreasing adoption of electric vehicles, given that the major thrust of the EV growth is kind of dying down, it's not such a popular investing trend. It's not with consumers, it's not getting adopted as quickly as many have thought. The questions are starting to arise from investors asking if maybe it would have been more prudent to go the outsourcing route. But it's in my opinion, it's still too early to tell if it was an expensive strategy or an effective strategy. Management saying that they remain laser focused on the factors within their control, driving greater cost efficiency, continue to ramp production, investing in differentiated technologies, and continuing to enhance the Rivian customer experience while maintaining a strong balance sheet. So those factors are somewhat in Rivian's control. What's not in Rivian's control is custom overall market demand for electric vehicles, which I mentioned earlier is falling. And to some degree, the cost efficiency may or may not be in Rivian's control. What's been happening over the last several years after investors poured billions of dollars into anything related to electric vehicles, it created an onslaught of supply from electric vehicle manufacturers. You had companies like Rivian, Lucid, Tesla, and others ramp up supply significantly because they were invested in, they got access to billions of dollars because of the investing boom in 2020 and 2021. Rivian is no different, right? They've got, at one point they had $18 billion of cash on the balance sheet, right? That was money that they were then taking and investing in increasing supply of electric vehicles. Rivian was not alone. There was other companies that were also infused with billions of dollars, and they too were increasing supply. So with all of these companies increasing electric vehicle supply, it's driving us costs, it's driving up costs for supplies, right? Because now you've got all these several companies all going to the same suppliers asking for these materials to produce electric vehicles. And so that's driving up the cost of those materials, because now you've suddenly got a burst of demand. It's been great news for suppliers, not so much for EV manufacturers in 2023. Another big news item that came out of Rivian's conference call is that they amended their agreement with Amazon, the terms and conditions, which will now allow Rivian to sell their electric delivery vans to other businesses. That could be big news, right? Rivian has contracted with Amazon for Amazon to purchase 100,000 of its electric delivery vans. So far, Amazon has been slow to request those electric delivery vans, right? So far, Amazon has only ordered and received 10,000 of these electric delivery vans of the initial order of 100,000. Rivian has said that they were expecting Amazon to order more initially up front, and they're a little bit disappointed by Amazon's hesitation to increase these orders. But remember, Amazon has been on its own cost-cutting campaign ever since overinvesting in its logistics capabilities during the earlier stages of the pandemic. Amazon is trying to cut costs and improve profitability, so they're not really looking to ramp up or turbocharge orders of these electric delivery vans. This opens up the possibility of Rivian making deals with other businesses to deliver their electric delivery vans, and that could be something that we'll start hearing more of over the next few months, over the next few quarters. I hope to see some announcements come out of Rivian where it made deals for orders of thousands of these electric delivery vans. I'm looking out for that from Rivian. So during the quarter, the company produced 16,304 vehicles, and I got what I was looking for, right? I was hoping, if you watched my videos on Rivian in the previous quarter, I was looking for Rivian to announce an increase in their production guidance because they were ahead of schedule. During their last update, when they informed investors of their production numbers, I mentioned that they were ahead of schedule. And if they didn't increase the production guidance, investors would be upset because they would say, well, that would mean that in your fourth quarter, you're going to significantly reduce production, and that would be a bad sign. But they did indeed increase their production guidance, even though it was only by a little bit, just 2,000 units more. They needed to increase that production guidance, otherwise investors would not have been happy with Rivian management. And it's good to see that they did indeed increase their production guidance. So Rivian vehicles have now driven over 490 million miles, which provides the company with a lot of data and feedback on the vehicle performance in different environments and what features can be added or enhanced to improve the customer experience. That's true. The more data they collect, the more they can see the way customers are using their vehicles, the more that can inform Rivian, especially they're getting ready to change the technology to go up to the next one. Right now they're in their R1 technology, next gen R2. They can use all this information to implement into the R2, and they talked about earlier cutting costs and improving and becoming more cost efficient. The data will really inform how you can become more cost efficient. If you've given customers these 10 innovative features and you see they're using 7 of them and they're not using these other 3 features all that much, in your next gen technology, you can go ahead and remove those features and now produce those vehicles at a lower cost, and you won't be afraid that customers are going to get upset or there's going to be customer backlash, because you have the data to show that customers are not really using that feature that you initially thought they were going to use. So you can optimize your production based on what you see your customers using and thereby deliver things that customers want. In the same way, when I'm looking at my videos, I see the data on what you all are watching, and that informs me on what you all want me to create. And so I can make videos that you all want to watch and not make videos on companies that you're not interested in or on topics that you're not interested in, right? It takes me a similar amount of time to make a video on a company that no one watches versus making a video on a company that everyone watches. And so getting the data to know what my what my viewers are interested in really helps inform what to produce. And the same can be said for Rivian. Getting that data on what features their customers use can inform them on what to produce, and so they don't waste time, energy, and money producing things that the customers don't want. And one final big news item I wanted to cover is that later in the fourth quarter, they plan to launch leasing for their select R1T vehicles in certain regions. So they're going to roll it out on a scale basis, on a small basis to test it out first. But leasing could really help enhance ownership for people who maybe cannot afford to purchase an electric vehicle, or maybe prefer leasing instead of purchasing. This opens up their vehicles to more people, and it could enhance sales. And that is really what Rivian needs right now. They've got production capacity to produce up to 150,000 units. And so what they need is really to spur customer demand so that they can scale up to that 150,000 units. And if this gets a good response from customers initially, they can roll it out to more regions, make it available to more customers, and it could really be a big thing for Rivian going forward. All right, so a lot of big news items coming out of Rivian in this quarter, right? Number one, increasing their production guidance. Number two, changing those terms with Amazon, making their vehicles available, their electric delivery vans available to more customers, and launching the leasing platform in certain regions. So these are things that investors are happy to see for the most part, and something that investors should continue looking at with Rivian stock going forward. Before I let you go, if you gained any value from this video, please make sure to subscribe to the channel. It really helps me make more videos like this one and keep this channel free for most of you viewers. Thank you so much for watching.